So what I want you to do and consider right now is how much cash flow, assuming you've got no housing expense. So you've got a house with no debt on it, no rent. How much additional cash do you need every week to live the lifestyle that you want? You're going to need a lump sum of $2 million if you're after $2,000 per week. So you would need a property portfolio of $2 million completely debt-free with a rental yield of about 5 to 6% to create that $2,000 per week passive income. So that might seem like a lot of money to create in 10 years, but I'm going to show you how you can do that now. What you've got to do is, if you've got your lump sum target, and let's say it's 2 million as an example, you've also got your mortgage. So you might have 500K left on your mortgage. We've got to eliminate that too. So take your lump sum target for your cash flow, your passive income, add that to the debt that you've got on your main home now. This is now your financial number. And this might be the most powerful thing that you get out of the whole presentation today, is your mind leaving with the weight of this target set deep in your subconscious mind, because now you know you need to do something about it. If it's 2 million, 500K, it's 2.5 million. Now, what I need to outline now is, if you've got 15 years before retirement to create 2.5 million, you would need to save $166,000 per year, or you would need to save $3,200 per week. Now, to save $166,000, you would need to earn $320,000. So if you're on 200K now and not saving a single cent, you would need to get a pay increase of $320,000 to be able to save $166,000, and you'd need to save every dollar for 15 years to create that amount of money. It may seem overwhelming. If you can just note for a moment that saving will not get this done. So how can you create such a massive lump sum amount? And the only way to do it is leverage. If you've got 100K in cash and you invested at 7% per year for 20 years, that is only $390,000 cash in 20 years. But if you take $100,000 cash and use that as a deposit on a $1 million property, and that $1 million property grows at 7%, which is the long-term average growth rate. And even if you don't pay back any of the debt, which is like a $900,000 loan, that property will be worth $3.9 million in 20 years. The debt on it, you'll have $3 million net. So the difference is that if you use leverage and get a good growth rate and enough time in the market, you can create millions of dollars of wealth with one or two properties.